Good morning and welcome to LNG Marketplace Weekly News Flash. Here's the latest news we have selected for you from all over the media. Today's breaking news is a new merger in LNG industry. Total acquires LNG business in Texas from Toshiba. The troubled Japanese conglomerate, which for over 20 years was locked into a contract to pay a fixed processing fee for LNG from Freeport LNG, regardless of the LNG market rates, has suffered huge losses. For Total, the deal comes amid a push to expand its LNG portfolio and follows its acquisitions of Anadarko's Africa assets, which include an LNG project in Mozambique. This we read on Asia Review Nikkei and on Reuters. Talking about consolidation, Synergy Group, a little-known investment company based in Cyprus, is raising between $5 to $10 billion for acquisitions of underutilized or idle natural gas assets in the Eastern Mediterranean. The assets include production facilities in Egypt, Israel, and Cyprus. The company believes that consolidation would be beneficial for the industry as the LNG discoveries in the Eastern Mediterranean are relatively close to each other and partnerships are an obvious way to lower costs and produce internationally competitive LNG. This is stated by an article on Finance Yahoo. The LNG plant developers are planning the next wave of new investments, following the first one at the beginning of this decade. It is known as Second LNG Boom. Will the new LNG projects avoid the issues from the past such as cost overruns and delays? It is believed so. Stricter capital discipline, much less concentration of projects will lessen the inflation pressure, especially in manpower, modularizing projects, construction of components off-site and lower raw material costs due to economic slowdown are the factors supposed to improve the project's economics this time around. The entire analysis you can read on Hellenic Shipping News and Finance Yahoo. More stringent sulfur emission requirements of the International Maritime Organization will come into force in 2020. There are three options to comply with them: the use of low sulfur fuel oil, the use of scrubbers that capture sulfur and other pollutants from fuel, and last but not least, the use of LNG as fuel. If you want to know their advantages and disadvantages, you can read the discussions on Hellenic Shipping News. Now let's move on to the Chinese market. China is planning to liberalize the gas market and open up infrastructure access for smaller downstream users. The first cargo received jointly by Guangdong Energy and Shenzhen Energy in Dapeng LNG terminal reflects this trend and is based on third-party access awarded to those companies by China National Offshore Oil Corporation, as we read on S&P Global Platts. On the same page, we have found that Chinese LNG imports are growing and without a significant influx of U.S. LNG due to higher tariffs. China is looking into other sources of supply. China's LNG supply from Australia already rose 61%, and China's LNG imports from Qatar went up to 6.2%. Although it will be another 4 or 5 years before LNG Canada projects begin shipping liquefied natural gas to customers in Asia, the smaller players are already buying LNG from FortisBC, Canada's largest private utility company, and exporting it by ISO containers on container ships to industrial buyers in China, as we have found on Pipelines New North. German state-owned development bank KfW is apparently among those banks that were already given mandate by their principals to stop lending to coal-fired projects. The bank is now generally focusing on project financing of clean energy sources, having a number of projects that are focused on LNG to power and being in negotiation with the first-gen Filipino power generation company for the financing of LNG projects in this archipelago country, as we have read on Manila Bulletin. And finally, in some other headlines, JAX LNG, the first small-scale LNG facility in the United States with both marine and truck loading capabilities, is already operational. In addition to marine and trucking companies, the JAX LNG plant is positioned to serve other industries including rail, drilling, mining, power generation, commercial, and industrial, as we read on Finance Yahoo. Japan's Nuclear Regulatory Authority would order Japan's power companies to shut their reactors if they miss the deadline for completing safety facilities. However, it is believed that unless all of these reactors are shut at the same time, demand for LNG as an alternative fuel source to nuclear power is unlikely to surge. This we have found on Hellenic Shipping News. GAIL, the largest state-owned natural gas processing and distribution company in India, aims to import 75 LNG cargoes in 2020 versus the 62 in 2019. India's GAIL plans to raise imports by 21% year-on-year are mainly due to meet extra demand from the fertilizer sector. This piece of news you can find on Finance Yahoo and S&P Global Platts. The political unrest in Papua New Guinea threatens to delay a $13 billion plan led by Total to double gas exports, sending shares of one of its partners, Oil Search Ltd, down nearly 4%. This we have read on TRT World. That's it for this week. Tune in next week for more news, and until then, thanks for tuning in. If you would like our weekly news flash and do not want to miss any of the future episodes, simply subscribe to one of our podcast channels including YouTube, Apple Podcasts, SoundCloud, Android Podcast, RSS, and email.